And hello, everybody. Welcome to The Insiders on Real Estate and Marketing, Episode 9. And I'm Sandy Hibbard. This is my co-host, Troy Olson. And today we have a very special guest, a dear friend of mine, Mr. Marc Miller, President of Secured Title of Texas. We're super excited to be here in Studio A. So we've got a little bit of a different setting here today. But lots of notes and lots of good information. So the table setting is good. We're going to have a conversation about cybersecurity, the title industry, how to market around safety for your clients. We're going to talk about the boom in refinance and so much more. But first, Troy, let me just touch base with you and see how are all those listings doing?
They're good. They're moving.
Yeah.
So yeah, we popped a couple of them first showing, which was good, and we've got more coming. Things were slow, right after Labor Day, kids going back to school, adjusting, but then the week right after that, it was just another, big explosion.
Right. With the kids being at home with this new school year, kind of a strange thing. How have you seen that affect the home buying situation?
Yeah, just the timing, just trying to coordinate, their schedules with their work schedules, with their kids' schedules, any activities that they're involved in, still all the chores that got to be done. And then with the limited, supply of inventory, there was a lot of going out and looking at one or two homes at a time with multiple different buyers, but that's what you have to do in this day and age.
It's a crazy time. What I've been hearing from my clients is the craziness of all the listings right now. Some of the reports I've been reading from Steve Brown, Dallas Morning News, talking about the influx in refinance, the influx in new builds actually is starting to heat up a little bit. Right. So hopefully that's going to help with the inventory problem that we have right now.
Yeah, I think the biggest challenge that that builders are facing, lumber went up, was at 40% mark like 3 weeks ago, and that literally is, of course, going to get passed down, right to the consumer. So if you were looking
I read that.
If you were looking at new construction and you come back 2 weeks later and you have a monumental price increase, it's not because, they felt like it. It's because of lumber specifically.
Well, it's what they always say, that it's going to be passed on to the consumer, but the market spins it to say, oh, don't worry about it. You're still going to be able to afford it because we're lowering the mortgage rates.
Yeah, the interest rates being down as low as they are.
Yeah,
right.
But still the prices are crazy.
I still think this is going to be more than one way the out of cycle year, which in our business, the cycle usually starts to trail off in the fourth quarter. And I just have a sense that we're going to press right through this fourth quarter and really have high activity because of the stall that we had when COVID first hit.
We've talked about that, haven't we? Yeah. In fact, I think we predicted a couple of months ago that this next 45 days was going to be crazy. And then one of my clients did a video this week saying, is fall the new spring? So, lots of talk going on about the craziness in the market. But I want to get down to some nitty gritty here today, the business side. And so, Marc, it's such a pleasure to have you here.
It's good to be together again.
We go back a long way. So Marc is president. He's taken on a new role, president of Secured Title of Texas. I worked with Marc, and I think I've even mentioned him a couple of times whenever we've had past episodes about being baptized by fire in the real estate business when I bought my company, Lyric Marketing. And Marc was the clergyman who baptized me with fire into real estate and marketing.
Yeah, we did some great things.
Oh, we did.
Yeah.
I mean, we have done some tremendous things. Back before, we had Facebook. We were doing billboards. We
did Inside Real Estate in the Plano Star Courier. We had an article every week that we did on that. Yeah.
I used to push to get real estate agents featured in newspapers. It's like that just seems so old to me right now. It's crazy, crazy time. Well, anyway, so Marc is here, and without further ado, I want to get he and Troy involved in some conversations about some very important things that we're going to talk about. It's hard to have you here and not want to pick your brain about everything because your title experience goes for 20 years as far as what I've known you. And I'm sure it goes deeper than that.
43. This is my 43rd year.
Wow.
That's a few cycles.
That's a few cycles. Yeah. You've seen some real estate agents come and go, I'm sure.
I have. Yeah.
Well, so briefly, give us a picture of what impact, and we've talked about COVID, and I don't want us to hover over COVID too much today, but give us from your standpoint what kind of an impact you've seen in the real estate market here in Dallas that COVID has had.
Well, certainly it put everything to a screeching halt initially.
Oh, yeah.
And then everybody started to panic about how are we going to do a closing. The interesting thing is there was a major legislative push nationwide to get what is referred to as RON, which is remote online notary.
Mm-hmm.
And they blitzed it through the system to get it approved. What they didn't anticipate with that is that the majority of lenders do not accept remote online notary closings.
Oh, that's true. Have you done any online closings?
So we had one where I was representing the seller, and that's how the buyers signed. But even as recent as 2 days ago, I had a buyer closing, and the email from the title company was, unless you are signing, you are not here.
Correct.
So how'd they work that through?
Well, they went back to what we've been doing in the old days of, which was really the refinance boom, and, and it transitioned from using notaries, actual notaries, to go to homes, and they went and they adjusted to drive-by closings. So you pull up front, the escrow officer comes out with their mask on. They do the signing, notarized documents, and get it closed. The interesting thing is that there's certain companies, and it's more the national platform, but I'll give you an example under the Fidelity family, and we represent Fidelity as one of our underwriters, but they have their offices still locked down. You cannot walk inside of a branch office. You have to make arrangements to either notary close or to close with a drive up to that side. I opened my offices 2 weeks ago. And so we just do exercise.
That's so interesting when other things that don't seem so necessary have opened.
Yeah. So we do sanitize just like we did in this room, and people come in with their mask on, and we close them at the table, and it's working just fine. And then we sanitize again, waiting for the next closing to come. But certainly, if you look at the purchase side of our industry, the closing experience is really important because I think it also establishes kind of the final relationship that you've had through that process, and that's really a real heavy referral opportunity for the realtor. And so I miss that side of it because that is a celebration, if you will.
It is. I can see that.
Final opportunity to really interact with those people before they go into their new home or the seller sells and moves. So I think that's that little loss of relationship touch. We've had to go to this technology side. Has certainly been challenging.
I think we're seeing that across the board.
We are. I mean, as Mark said, that's our last chance to dance with them. And when they're sitting in their car and the person signing them is wearing a hazmat suit, and then you see a picture, you see a picture on Facebook from the title company or whatever. It's like, well, that was my client, but it doesn't look like I was involved because I was not allowed to be part of that. I mean, I could sit in the car, next car over, but it just, it did absolutely take away from, we all want to showcase that and share that moment with them. And we weren't able to do that this summer.
Well, we're hearing a lot about the rent and mortgage payment delays due to COVID. And so much talk and chatter about what's going to happen. Are these poor people going to all be bankrupt 3 years from now when someone says, you owe us $1 million? What's going on with that? Talk about that with us.
Well, I mean, statistically, you look at it and there's almost 4 million people that are not making payments on their mortgages. So you can't continue to just defer the payment. The forbearance agreement somewhere has to come to a conclusion. I think that probably some people may have been at risk when they went into a forbearance agreement, not realizing what the lender's criteria was going to be. And there's two things I think are challenging that. And one is, do you get to push the payment to the principal that you can use as a payoff, or are you going to be responsible at the end of the forbearance agreement to make the payment? And that's going to be a makeup payment, by the way, of a lump sum.
I mean, that's going to put people in a really bad situation.
Yeah. So I think that's going to be a real challenge. The second thing is you should be confirming with that lender if you're going into forbearance, and there may be people today that haven't gone in, that you want to make sure that there's not credit reporting associated with that forbearance agreement.
Oh, absolutely.
So that you need to be protected in that side. So now all of a sudden you're not reporting delinquencies and now affecting your credit score as well.
So basically what you're saying is that they're going to pack it on the back end of the note.
Yes.
So I'm a homeowner. I've missed 6 months of payment. I'm not going to be, hopefully, I'm not going to have a bad credit report because of that. Hopefully, I'm not going to get kicked out of my house for that. And then the mortgage company will just add that to the back end of my loan.
Right. Exactly.
Do you think they'll increase payments, though?
That's always going to be a possibility to that side. But I think, as has been our experience so far, and particularly in Texas, is that those payments increases are associated with the increase in real estate taxes. So not only have you got the forbearance issue, but you've got a hugely accelerated appreciation and now taxation on property. And what I'm seeing in the national circle that comes into focus in Texas is that there's companies that are already forming their default strategies out there that are in the large mortgage servicers.
Mm-hmm.
And so what they're doing is they're coming into these spaces and they're trying to create a title company solution to their mortgage servicing, which is the asset management side, moving it into pre-foreclosure notices and foreclosure. So they're lining up, and then outside of that circle is the capital market. And Wall Street is lining up with billions of dollars in capital. And part of this new strategy in the commercial side, which I think will impact residential, is that they're going to be looking to buy portfolios of property.
Mm-hmm.
And there's two strategies to that. One is a normal portfolio of just buying a portfolio of notes.
Mm-hmm.
But the other one is that strategy of getting tenants into homes and then buying portfolios of 100, 200, or 300 homes that have tenants in that portfolio. And that's going to become a new commercial trade in our industry.
I know you're going to talk about this later, so if I'm stepping on that, we can move on to something else. But how does all of that affect the local title agency that are ran by a group of attorneys or something that doesn't have all the funds that come from a national underwriter?
Yeah, you're going to be the outsider looking in. Now, the other side of that is that type of business compresses into a title operation, and it becomes the same thing. It's churning and notary close and no closing experience. And so I think it's almost to our advantage because we have the opportunity to be more relationship, local market driven.
Absolutely, yeah.
Than we have to be on the national side.
Yeah.
I think the other thing interesting with this is that as much as we talk about the mortgage forbearance, we've also got the tenant who's getting rent forbearance.
Mm-hmm.
And there's certain prove-ups that tenant has to do, but that just came effective September 4th
Mm-hmm.
and runs till December 31st. So you have to go through a prove-up, in essence, that you're not capable of making the rent payment. And if you do that under what is required by the government, they don't have to make a payment on rent. So now I'm an investor,
Okay.
and I've got that property. And now between September 4th and December 31st, if they meet the criteria, I can't force them to pay rent.
You don't get any money.
I can't evict them. I can't do any actionable thing in order to deal with that asset other than if I decide to sell it, then I am given the right to show that property under certain circumstances.
Wow.
So we've got an investor market sitting out here that usually own, maybe a small 1 or 3 or less than that or a little bit more than that homes, and now all of a sudden their cash flow is being affected because that was part of their strategy for their income.
It's just like an octopus tentacles that just reaching everywhere.
It's just wrapping around everything.
Wow.
Yeah.
Wow.
But strangely enough, the market, as Troy was pointing out, is strong right now. It's a good market. Thank goodness
what are
for
some
low
of the,
interest
yeah,
rates.
what are some of the reasons why?
Well, I think it's, again, there's lack of inventory, so people are bidding high on what is available, and they're not asking a lot of questions. It's, there's 2 options, and that one's already gone, so I got to buy this one.
Nothing's really changed, I think, in the credit side of it. And if you got the lower the interest rates has dropped 2-3 basis points, buy a lot more house than what you could before as well.
No, absolutely.
So it may be come over in a little bit more into that affordability category that they wouldn't have had prior to, and maybe that kept them at a $200,000 home or below. Now maybe they can get in a little bit higher price point with that lower mortgage payment.
Talking about how has it impacted us? Because of all the refinance that's going on, we've seen a shortage of appraisers because when people buy homes, the home's got to be appraised.
Right.
When they refi, they got to be appraised, and when there's that many refinances going on, that's still got to get done. It bogs down the pipeline, and the days of we can close this in 30 days. We've had to do a couple extensions just because of the shortage, of appraisers. So they're taking
That's
longer.
interesting.
So we're looking at a 35, an extra week, one more working week of when we make offers or when we get offers on our listings.
Right.
The interesting thing is when COVID came to play and the market tipped.
Yep.
If the mortgage rates had not dropped and the refinance boom occurred, there would be a lot of title companies out of business right now.
Right.
It propped up the title insurance industry. But on the other side of that, because of the massive amount of refinancing, what happened to many of the title companies, and those are more nationally owned, I'll say that, is that they went to a second strategy for production of the title commitment, and they started going offshore. And when you go to offshore into India, You're not dealing with the same examiner who's
Whoa.
local. Like I have a local examination plant, and my examiners are familiar with the turf here. What happens then is that product that starts coming back is not an accurate product.
Yeah.
So
That seems odd to me
Yeah.
that people from overseas would be handling stuff that has to do with land transactions.
Well, and this
here.
this is not new.
It's not.
It's just not been a major factor except for this COVID. So what ends up happening, in this example of a client that called me, had closed with a major underwriter. They didn't make the closing because they went offshore. Title commitment came back. They moved to close. They get to the closing table. They put the seller's affidavit of debts and liens in front of the seller, and he refuses to sign it, thus disclosing that he has a federal tax lien. And the federal tax lien was not picked up in the examination. And the wife sitting next to him had no idea about the federal tax lien. So all hell broke loose in that scenario. And so it's all of a sudden where title plants were not as big a factor because it was a local production, it's now becoming more of a significant concern for realtors that are out there selling, because there's a complete loss of quality of the examination process and the product that comes out of that. So that's certainly one of the challenges from the offshore solution, if you will.
And one of the benefits of staying local.
Absolutely, yeah. So
Wow.
we serve local. We don't do national business. We do the business that's in our marketplace to that side, and we can respond well to that side of it. So it sounded like a good solution if you have the right quality control, but in this case, they're not getting good quality control, and it's putting additional stress out there in the marketplace.
How do you know that? I mean, as a home buyer, as a realtor, and I'm working with a new title company, or I'm working with a new realtor who's referring a new title company. I don't know anything about title companies as a consumer, as a homeowner. How can I be sure that all of that stuff that I'm giving is safe and secure and not going to be turned into cybercrime on me?
Right. Well, there's a couple of things, and part of it is prudence, which is not the natural course of our industry as it relates to the clients we serve. And to me, prudence is if you get put into a situation where you don't get to select the title company, and let's say that's most of the time when you're representing the buyer, and seller has a preference, and you don't recognize the brand of that company, and a lot of times it may be because you're out of your local market too, then the most important thing you can do is ask two questions to that title company. And number one is, who are the underwriters that you represent?
There you go. Yeah.
Because the title underwriters will tell you a lot about the title agency. If the agency does not give you one of the top four in their makeup of their representation, then that says a lot about the quality of the title company.
What are those for?
That would be First American, the Fidelity family, Stewart Title, and Old Republic Title.
These like the big guys.
Those are the big guys. Those are A prime, A double prime paper. They're vetted. They have capabilities.
That means your money's safe.
That means
there,
your money.
escrow.
If you have that as an independent agent, that's your good housekeeping seal of approval to that side.
Right.
The second question I would ask in today's world, in that same environment, is I would ask for a copy of your cybercrime insurance policy, because it's available out there but not required. So why would you want to have that? Well, what happens if you're with a local agent that is, maybe it's a single shop, and now you have the penetration of a cybercrime, and you just sent $190,000 to Hong Kong? How are you going to fulfill the funding of that transaction if the $190,000 just went out the door? It's not covered
That's
under.
scary.
It is.
That's real.
That's
huge
real.
money.
It's real stuff,
Oh, yeah.
and it's not covered under what we refer to as an insured closing letter. That's more to fraud of the agent, not of the experience. So we need to be asking a different set of questions when we're out here in this marketplace. And it's a simple way to make a determination. If I've got the buyer and they tell me that we have Old Republic title, I'm going to request that title commitment. The reason and policy, and the reason is in Texas, everyone as an independent agent remits the same amount of premium to the underwriter. So you don't get any benefit between checking this underwriter or that underwriter. And I'd want one that has statutory premium reserves of $1 billion plus versus $5 million. It's a significant difference in claims paying capability. So that's a question that the industry typically has not asked, but it's something that probably becomes more imperative in the future.
This is such important information. You know, it makes me remember back to all the marketing that my company has done for you in your various title hats that you've worn, how important it is for the consumer to be a little bit educated about title.
Yeah.
And even though they don't always go in saying, oh, I want, XYZ title company, it's the realtor that's driving that. But I think the consumer needs to be educated about that as well as realtors. I think that needs to be something.
And for the realtors who watch this and follow this, I mean, that's as valuable of information I think that we've ever had on the show. Is
absolutely it is.
You need to know who you are in business with.
Yeah.
Because like I said, your real estate client is trusting and depending you as
That's
an
right.
agent that you've got good partners and allies to protect you.
And I think your line of defense, if you're representing that buyer, if you do take that one step and you do make sure that you at least get there, because they're going to have the property going forward and they're going to have to deal with what might ever be a claim.
Mm-hmm.
If you do that one step and you put them with a good title insurance underwriting company, you've done your due diligence and you've placed them as your fiduciary responsibility with a solid company that will be there in the event they ever had a claim on their property.
So let's make it really easy for realtors that are watching us today. What are, let's say, the top 2 or 3 things that you would recommend that a realtor inquire about a title company or a consumer for that matter?
The 3 things I would ask for is I would ask for a confirmation of their E&O insurance.
Okay.
I'd ask them if they have cybercrime insurance, and then I would ask them for who their title insurance underwriter representation
one of those
might
4.
be. And they may have only one underwriter, that's a red flag. If they've got up to 3 underwriters, that's probably a little better. If one of those 3 is a national underwriter recognized in the industry, that's probably a plus.
Mm-hmm.
So it's just doing a little bit of inquiring. And I've always told all my clients, if you get out there and get into that field where you don't know, ask the question. And if you're not sure which policy to recommend, call me.
Mm-hmm.
I'll tell you which policy to recommend.
Absolutely. And here in Dallas, there are a lot of really good title people.
That's great.
I've worked with them for 20 years with
Yes.
Marc. And I think that, staying with the known names is really important.
It's important.
Don't go with those little small shops that just popped up or
Right,
something. So I think that's really, really important, is to stay with the known names. I know, Troy, that you've experienced some cybercrime stuff.
Yeah.
Let's talk about that for a second.
So, I mean, in 15 years of doing real estate, a lot of transactions, it had never happened.
Mm-hmm.
And it actually happened to one of my own team members on her own personal real estate transaction.
Oh, wow.
And it was, the situation was, the escrow officer took an email from somebody that said, hey, I want my net proceeds to go here. Well, Mark, you've been in title a long time. You do not take wire instructions
Absolutely
off
not.
of an email.
Absolutely not.
And the email address was created to make it look like it was coming from either me or my domain name. And it was a closing on a Tuesday. And she called me on a Thursday morning and said, is it odd that the money hasn't hit my account yet? I said, absolutely.
Whoa.
Something is wrong. And I remember exactly the day. It was ironically, it was on my birthday. I was at Coit and George Bush, and I said, what's the title company? And I called the title company, and I won't get into the details of that conversation on this show because it was ugly between me and them. And, their response was, calm down, this happens all the time. No, it doesn't. And it was about $65,000 that was gone.
It'd be so terrifying.
There is a protocol for title companies on what they are to do and not do.
Yeah.
What happens is that these criminals understand when to penetrate at the highest level of volume of closings in a month. Because you get an office that's a very successful office, they may be closing 20 or 30 deals a day toward the end. And so they know when the volume is and the lack of attention, and they know when to slip in to that side.
Real.
So, and I've had that exact same experience with an employee at a prior company. Got the change of instructions. My seller wants you to send it to this way. She wired out $190,000. Hong Kong said, thank you very much. The money was gone.
So what happens in a situation like that?
Well, in this particular case, the company I was with happened to be a subsidiary of a bank. So I called the bank and said, I need $190,000 wired in. So that's that capability.
Yeah.
I knew I had an $8 billion bank
There
in
you
this
go, yeah.
relationship. I knew the money was going to be there. They weren't real happy,
Mhm.
but we were able to satisfy that
Right.
scenario.
Now, with your team member, what happened to their $65,000? Did they have to
Basically,
wait?
I went to the title company, and the person that took that email left before I got there because they knew I was coming in real hot. I mean, I was protecting my own. And I said, I am not leaving until that money is in her account. And it was, we have to get with our corporate office in Charlotte, and this is going to take some time. And I mean, she got her money back, but it
Wow.
was very nerve-wracking.
Not
because
good.
Yeah.
like I said, something that just should not have happened, but it did. So, like I said, in 15 years, it happened one time, but it was under my
Yeah.
watch.
Yeah. I mean, that's something I've never thought about. In all the years I've worked with title, never even thought about someone
Well,
taking my money and putting
The
it
strangest
in the wrong
thing
place.
is kind of where the process starts, and what they've learned to do is they've learned to follow listings
Mhm.
on the sites where you post out a listing. Because what do you provide when you post out the listing? Your contact information
Yeah.
and your email.
Yeah.
Once they have your email, then they can figure out how to get inside, and now they start to track your activity,
Mhm.
and they know when to anticipate when you're moving toward a closing,
Mhm.
or that you went under contract and you're going to wire the money in
Mhm.
for your earnest money
Mhm.
side. So they've got that level, and then they know how to wrap around and get on the title company side.
Mhm.
So what they'll do then is they'll give instructions to the buyer, thinking they're communicating with the title company, saying, here's your wire instructions, send it to, and they wire in, and the same thing happens. Well, I had it happen in a commercial transaction where they penetrated into the title company side, and the buyer wired $1 million into BBVA. BBVA already had the count noted as suspicious, and when the money hit, they locked it down.
So they caught the people.
They caught it, and so the money.
I wonder
was,
how much money in cybercrime in real estate doesn't get tracked back.
billions. This is a major issue within the industry,
I mean,
and it's
people
just
stay
going to
local. Stay local.
It's just going to get more and it's just going to get worse. I mean,
Yeah.
there
They're
is no.
that smart on the other end.
They are.
They
The
really
sophistication will just continue. So we've got to be more alert. We got to follow our protocols.
Mhm.
We got to communicate. And the other thing is they count on that our industry has moved more to text and email communication than
Mhm.
verbal communication.
Mhm.
And verbal communication is the way. In those situations, someone should have picked up the phone and said, Mr. Seller, did you request to have your account changed from what you assigned
Oh.
at the closing?
Yes.
And Mr. Seller would have said, I did not.
Verify
And
that.
verify. So that's what has to happen. Verification. It's not about encrypting. It's about verbal verifications
Makes
of
sense.
what's going on out there. So
Wow.
so that whole process is, and sellers shouldn't be wiring their or emailing their information for their accounts
Mhm.
to the title company.
Mhm.
That's, there's a lot of don't do's that probably are common sense. It's just
Mhm.
we don't think about
Mhm.
in a suspicious way that
Mhm.
somebody's watching that transaction, but they are.
Yeah.
Uh,
I mean, everyone's pretty lax about what we share across technology until something happens like
Right.
this, until our identity's compromised or whatever.
Right.
And then we start realizing how many gaps we've
Yeah.
left open.
Well, and the other thing they like to do, they like to hang out at Starbucks and wait for you to go to the public domain, and then they pull your Wi-Fi right off of that and start
Yeah.
getting right into your
Yeah.
system of checking to see who you're communicating with. So
I learned that when I lived in New York City because they have public Wi-Fi. You can go down to the promenade, sit on the water, and there's Wi-Fi. And a friend of mine that lived there, that was also a partner that I worked with, said, whatever you do here in New York, don't use the public Wi-Fi. And I was like, well, why? I mean,
right.
and he told me, but that makes perfect sense because it just opens the gateway.
Right. And then some of the newer things that are happening too out there is that these criminals are using Indeed. Indeed sort of become the go-to for resumes. And so they penetrate through that side and they hire people for sending in false resumes. And they think they got a great credentialed person. They hire them and now they're inside the company and now they go get to the checks. And once they find the checks, then they start replicating those checks and then they put their scheme together with those checks. And I've seen this happen numerous times in the title insurance industry. All it takes is one check and they start replicating, they do their scheme,
Mm-hmm.
and then they send those checks
Mhm.
out to people that think whatever you signed up for,
Mm-hmm.
here's $5,000
Mm-hmm.
as part of your sign-on, And but be sure and send us back $2,000 for the equipment we're going to send you. So they deposit the check, send $2,000 to this space, and they just lost $2,000.
Yeah.
And because the check's not honored, next thing you know, the title company's getting a call about this check, and it's a fraudulent check that's been replicated.
Doing business eyeball to eyeball.
Absolutely.
You know, I mean, that probably dates me, but I still think, and there was a boss I had years ago in corporate, and he said, you've not communicated until you've communicated.
Mm-hmm.
And at first I didn't get it. But as I've gotten older, I realized, man, he's so right on. You know, we can send emails, we send texts, we post our videos, we post our things on social media, and never really communicate with that person that we need to solidify what it is that we're trying to transact. And
Right.
so I think that that's really important for realtors, for title, right? Eyeball to eyeball, at least to have that connection that's real.
This is not a business for shortcuts.
No.
It's really not. It's
The
really not.
proper processes and accounting protocol are all in place. It's just a matter of how that employee follows that protocol properly.
And they're in
and-
place for a reason.
Right, absolutely. And then you get into the challenges of a seasoned escrow officer versus a newbie,
Mm-hmm.
a seasoned escrow assistant versus a newbie.
Mm-hmm.
They don't have that experience of
Mhm.
20 years, 30 years. They could recognize a fraudulent effort in nothing flat. I'm about to implement
Very good point.
I'm about to implement a fraud detection program in my company for bonus related.
Oh, that's good.
If you pick up on a fraudulent process in title or in escrow, I'm going to pay you a thank you fee because you probably just saved us a tremendous amount of money
Yeah,
on a bigger picture of
That's
that.
great. That's
And you know, if
great.
you do that with just a little bit of incentive, you'd be surprised how much more focused everyone will be and more suspicious
Mhm.
than accepting to
Mhm.
that
I
side.
think that's good. That's secured title of Texas.
That's it.
Well, guys, this has been interesting and certainly has given me some good information that I think I can use in my marketing to realtors, because I think it's very important for them to know these pitfalls, be aware of them so that they can be a true guide for the person that's buying a home. To wind up the show, I want to go through our 3 takeaways like we always do. And this is easy for you to take and say, okay, these are the 3 most important things that I need to think about this show. So Troy, why don't you take it off?
So the first thing is, cybercrime is real. Replay that section, when Mark talked about, how to avoid it and who to make sure you are in business with. We all know that 2020, mentally has been a long year. I was talking to an agent yesterday and, they were frustrated and they said, well, this year's basically over, so we'll start planning for next year. There's 3.5 months left in this year. It is not over.
It's not over.
And you got to stay dialed in and
You
you
do.
got to finish
You do.
strong. What do they say? It's not how you start, it's how you finish.
Yep.
And finally, just, be professional and be compassionate, because we don't know what's going on the other side of the transaction.
That's a good point.
Why are they buying that house? Why are they selling that house? Why are they moving? We know what's going on our side. We don't know what's going on their side. We don't know, what they're going through.
Mm-hmm.
So just like I said, it's a small world in our industry, even though there's a lot of us doing it. So, be compassionate, with your day-to-day business.
Good takeaways. Mark?
I would
3 things about
say
business.
the next level is for realtors to ask more questions of the title company that they end up having their escrow close with, and that's when they first set that escrow up, because it's not a natural tendency to think like that. They just come in, what they're concerned about is receiving their earnest money, getting a copy of contract, and they're on their way.
Mhm.
Just a couple of questions asked is really, I think, imperative in this today's environment. Secondly, I really think it's important for the buyer and seller both to establish a direct contact with the escrow officer, because there's 2 benefits to that. One is that now we have our direct line of communication, but I've never yet to see any situation where when you finally got to the closing table that a relationship had not been established between that buyer and seller, because they may be working through circumstances of divorce,
Right.
federal
Like
tax
you said.
liens, those type of things. There's a lot of emotion involved in that.
Mhm.
And a good escrow officer can be a calming source for all parties to that transaction.
That's a good point.
And the last piece is be aware of the title insurance underwriters and get educated about what are the top underwriters to select from,
Mhm.
and just learn a few things about what it is that makes a good title insurance policy. Because if that person buys that home and they don't turn the normal over in 5 or 7 years, and they live there for 20, they should have 20 years of assurance that policy is going to be good in the event their property was ever
Absolutely.
challenged anyway. And the last thing I'd say is a rising thing to be concerned about is any transactions that you're involved in where there's airship involved. There is a lot of claims surfacing with airship. So you think you've got all the parties identified, you close the transaction, and 2 more pop up that didn't know about the closing and found out, and now they're at the table saying, "Where's my third,
part?"
my fourth?"
Oh, wow.
And this is a new movement in the industry right now, and it's also a fraud opportunity as well. To
Maybe
that
that's
side.
another show you come
It
back
could
and
be
talk
another
about.
show. So anyhow, what I'm going to do is, you know what I do? I start taking these platforms and start creating education.
Yep.
And I'm putting together a cyber presentation that I'll be taking out to the marketplace
Cool.
with CE credit.
I think that's fantastic.
And that's some of the things that we're working on. I've always been about education, and I think that's the way that you help your clients stay knowledgeable about what's happening out there in the marketplace.
Super good. My 3 takeaways. Number 1, stay local. And Marc, I want to take this moment to thank you for all the title work that you have done in this city in the 20 years that I've worked with you. And so why don't you tell everybody how they can reach you? What's the best way? Text or email? Or what?
Email is mmiller@securedtitletx.com. My cell phone is 214-384-4200. You could call me anytime when you had a question associated with some of the topics that we've talked about here out of that side. And our website is securedtitletx.com. So you can see where we're located, a little bit about us. And we're not only Texas, we're a national independent company. We're in the top 5 nationally.
Cool.
And so I've got a very large financial structure behind us. And that was imperative for me to make this decision to come on board with Secured.
Yeah. So, Marc Miller, be sure that if you have any title questions, look him up. He's a great guy to know. Thank you for being here today.
My pleasure.
My takeaways are stay local, be compassionate, realtors, and market yourself authentically, market yourself personally. When I choose a realtor, I choose them because we have connected in some way, and I feel like that they're my sister friend or my brother friend. They're somebody that I can talk to about financial concerns, financial situations that might make me worry if I can get a house or not, or things that, like the guys have said, you're going through a divorce or something's happened in your life personally. So I think that for a realtor to market on that personal level and not just be about your designations, and it's not just about closings, it's not just about a just listed, but it's about you personally, about taking the time to get in front of the camera, like we've talked about in the last episode, and share thoughts about a house, share thoughts about a community that you're in or whatever. I think that's really super important. Be compassionate, market authentically, and stay local. And I think with those things, guys, we've got some of the best real estate people in the country right here in Dallas-Fort Worth. So thanks, everybody, for tuning in today. I appreciate Marc being here. It's been great getting all the information from you. And Troy, my sidekick, I hope that you'll tune in with us next month. Ciao. Take care. Be safe.